Thank you, GFF, for getting us to speak to you guys on this very interesting topic about cross-border payments, the opportunities, and the future, both across B2B and retail. So we have an amazing panel today. We have bankers, we have fintech, and I'm like a hybrid between banking and fintech. I yo-yo between the two business models. But what we want to talk today about is that cross-border payments is a reflection of growth in the economy, because the payments are associated with either trade or services or personal remittances, which India receives more than 100 billion of annually from the diaspora. So how can we ensure that the payment system is secure? It could be cheap, it could be fast, it could be all the good things, but maybe for certain segments, price is a determinant. Some places, speed is a determinant, but obviously risk and compliance is top of the mind. So I think I will request the panel to introduce themselves and kind of make an opening remark on this topic to see that, if we look forward for the next 5 years, where do they see their organization leading the charge in the cross-border payment space? And over to you, Guha, my colleague on the right.
Sure. Thanks, Gaurav. Good afternoon, all. Speaking about cross-border payments, the holy grail for a cross-border payment is the one, which can be what Gaurav mentioned, instantaneous, economic, has universal reach, and also settles in a secure medium, right? So to tick all the 4 boxes is probably the problem statement for, most of the organizations, you could say banks or other providers. And with all fairness, what we have today, would fit under what we call the correspondent banking, system. While there are providers who have sort of layered on it, but the rails at the back are largely still, traditional, which suffers from its own challenges over time. Of course, there are layers, there are compliance considerations across geographies, so which makes a transaction generally late and delayed and not perfectly instantaneous like what we are used to in India. Now, going on to the other consideration of cost, I think from World Bank estimates, it's 5-6% from a retail transaction. There are some 16-20 billion to be saved if you do even a little improvement over there. While on the B2B side, we don't have cost as a major impediment today, while you could say transparency is. Now, sticking to where we are before getting into futuristic solutions, even within your correspondent banking space, there have been, you could say, 2 developments which sort of try to address this in some manner. One, even within the SWIFT, you could say the ecosystem. One, the GPI initiative over the last few years, which has brought about some transparency, improved, you could say, communication using the same banks and SWIFT network. And ISO, the next big thing, which will bring about the information, challenge that we have today and will improve, I would say, the compliance side of it faster. So even within the traditional correspondent bank, I'm starting from there, representing JP Morgan. I think these have been some developments, not target state yet, but which has moved the, you could say the need a little bit from just being a boring correspondent banking to a little more interesting. Of course, we'll come to what else and the exciting stuff as we go along. I'll pass it on to Prachi.
Thank you. Good afternoon, everyone. I'm Prachi. I'm co-founder at PayGlocal Technologies. We are a fintech focusing on solving for cross-border flows. Before I take you through things that PayGlocal is trying to solve, I'll just like to give some understanding on how Indian ecosystem from a macro perspective has been evolving when it comes to cross-border. So if we think of a scenario of a boutique who is selling dresses on the street that we know, their first way of going digital is probably putting a UPI QR into their shop. Their second thing of going, digital is probably trying to sell on platforms like Flipkart, Amazon, Myntra, and then once they cross that bridge, they start thinking now, can I start exporting? Can I start looking at international customers? This persona then goes on, sells on Amazon, Alibaba, Etsy kind of a marketplace. And then also tries and creates a website of their own saying that why do I want to pay 10-20% commission to the marketplaces. They create their own website on platforms like a Shopify or a Magento or a WooCommerce and all of that. And as the aspiration of the country moves forward, there needs to be payment processing platforms that support these aspirations of, merchants who are going global from India. And the number only keeps increasing by the day. And that's where PayGlocal kind of fits in with our vision to foster global commerce. So we create products which supports exporters, whether they are into goods exporting or services exporting. So you could be a freelancer, or you could be an exporter, or you could be a SaaS company who is selling to international customers. And we have products to kind of help you, process these transactions. Again, as Guha mentioned, when it comes to cross-border payments, transparency, cost, the time that payments take to process, all are key hurdles. In certain segments, pricing is a challenge. In certain segments, just the availability of payment products is a challenge. And there are products that banks have offered for so many years, but then there are products which are outside banking ecosystem, especially when it comes to marketplaces, whether it is Upwork to Amazon. And I think that's where fintechs play a very significant role, in acquiring small customers. The SMEs and MSMEs, probably somebody who is sitting in, Badoi, and wanting to now sell, and those are the aspirations that we are wanting to support.
Thank you so much, Prachi. I think I represent HSBC India. My name is Sandeep. The HSBC in India has been around for 170 years. Through the 170 years, we have walked with the country. We've facilitated payments locally. We've connected payments around the world. Our standard product is around global transfers. If you pay an HSBC to HSBC account anywhere in the world, it's instant, it's free, there is no fees. Right? So we were talking about whether you need to be cheap or quick or secure or compliant. I think you get all four. Right? Then you come to global money, where we have connected a range, almost 80 countries around the world, connected the local rails. You look at a UPI in India, you look at payment rails in Singapore, in the UK, in the US, what have you, with our global transfer capability. And there you build, again, an optionality to be able to pay at a very, very low fees, almost on a real-time basis. Now, we are not stopping there. We continue to build on that. So whether it is partnerships with international money transfer companies, on the 9th of September, we are launching an ability to pay over 600 universities anywhere in the world. As people live, work, study overseas, you'll be able to directly choose your university, directly be able to pay. So just a very quick introduction, and we'll continue to speak more. Yeah, thank you.
Hi. First of all, very good afternoon to the audience. Last time it was a smaller room, it's even a bigger room, and you guys are practically making me nervous. All right? So,
you have a lot of fans in the room. Very loud cheer, very loud cheer.
Very loud cheer. Okay, so that was a giveaway. But first of all, PayU has now been in India for almost 10 years, all right, and very proudly part of the digital story. The footprint is both domestic as well as international, right? We do cross-border. We've been pioneers in the import side of it. We are getting aggressive in the export side of it. But the bigger part of this topic is, if you look at India's vision, what is that they want to do? India is the 11th player in the export market, right? And if you look at the cross-border e-commerce side, its contribution is only 1%. China is at 6%. And if you look at India's goal, we are trying to hit 1 trillion. We have to grow at 20%. And when you look at all this, you realize that, and if you look at the seating arrangement also, I'm just breaking it away. There is a bank, there is a fintech, there is a bank, there is a fintech, and there is a bank. Right? We never planned it, but that is what it has come out, right? So this is how we are going to deliver to the vision which is there, which is not only partnering together, which I think everyone wants to do together, but also solving for India. Because India is tier 1, tier 2, tier 3, tier 4. It is complex. It is in various segments. And as Prachi mentioned, right, the gig economy is one of the segments which is growing, right? C2B, which is the consumers, which is your Instagram, is really growing. How do customers, buy from abroad, and how do others buy from India? These are things which PayU is solving for. Obviously, there is technology. Obviously, there are products, real-time addressing things. But most importantly, knowing that India is cost-sensitive, bringing the price down. But there is so much more to go around, so over to you.
Hi, everybody. My name is Sriram Muthu Krishnan. I'm with DBS Bank and based in Singapore. When you look at DBS Bank, many of you might know that we cover all segments. We are both on the retail as well as the corporate segments. And with the corporate segments, we actually cover the large corporates as well as the small corporates. But more importantly, I want to bring a differentiation. we work with fintechs quite a lot. We look at them as partners, enablers, and actually we aspire to be more fin and tech together rather than one or the other. In terms of answering the question of whether it is fast or secure, or I think everything is important. But what takes primacy is the use case. So if I break it down, some 7 years back, we started enabling retail customers to actually acquire the ability to make cross-border payments with no fees. It was fee-less and it was entirely app-based. And that has taken off really well. We've seen volumes grow across a franchise almost at 100% clip every year, year on year. So that shows that it has legs. People want to access easy-to-use app-based cross-border payments enablers. But when you move to the SME segment, the requirements are slightly different. Because when you do trade, you need to add on a few layers for regulatory reporting, be able to do that, but you also want the benefit of what you earlier used as a retail customer. So we now try to bring that through something what we called GlobeSend. So we recently launched DBS GlobeSend across the markets that we're present in, about 7 or 8, where we can actually use a similar fee-less approach. It's completely cross-border, it's completely digital. And when it comes to fintechs, we also serve them using APIs. Then, when you move one step up the chain, we talk about large corporates. How do we serve them? We serve them through a bunch of APIs, and it is again, what they want is it's not so important that it should be instant at that point of time. It's not an app-based experience that they're looking for. They're looking for security. They are looking for the ability to transact maybe tens of thousands of transactions a day, but they want security, they want reconciliation, they want the ability to link to their ERPs. So we enable that. You take one step up, we talked about correspondent banking partners. We enable our correspondent bank partners and fintechs as well, but what we do in that case is actually we help them to aggregate, use our network, and reciprocally we use theirs. So that is why the partnership is important. So in every one of these cases, the requirement of fast, cheap, secure, it's very blasé to say that I want one or the other. You want all of them. But some things are more important in certain constructs, and that is what we try to bring to the table.
Sure. I think that's an amazing opening remarks from our panelists. They did contextualize their roles in their organizations and what segment they're going after. And I think just to kind of summarize it again, like just to make it here and now, is that when you do cross-border payments, if you're a bank or a fintech, you have multiple counterparties, as I think Prachi explained the persona of our small merchant who first does QR code and then does a local website, then Alibaba, Taobao, and then eventually multiple pay methods. So that is a good journey for a small merchant, but like big banks like JP Morgan and HSBC and DBS, they're mostly on their institutional side B2B, the big B. And this is not Mr. Amitabh Bachchan, it's like the really large Fortune 100 corporate, the big B. And then there is a smaller B, which could be commercial banking or SMB, and then there is a small merchant or a P2P. So obviously payment is a payment, like somebody is instructing somebody to pay somebody in the destination currency, FX is involved and fees are involved. So I think those are the two raw materials for that, and obviously security and risk and compliance being table stakes. So I think we have to again go around on this table to say, how are these FX and fee being optimized to give customer the most value for their money? And like they said, the big B might not be interested in be fee conscious, but the small merchant who's selling some artifacts or Madhubani painting might be price conscious. So my question to the panel is that, aren't cross-border payments looking more like domestic? And it's a provocative term, because now on the both pay in and pay outs, it's actually UPI pay in, bring the money into the bank account and have a proprietary messaging, whether through a correspondent bank, and then you have a payout again through a local partner. So not many transactions are actually going through the multiple hops like we had to take to come from 4 to 3 via 2, but if there was no 2 on the left, you had to go somewhere else with intermediation and disintermediation. So it's very direct. That's why it's instant. Like in India, you need tatkal, right? So it is tatkal. I worked at Western Union. If you use Western Union app and you used UPI to fund in or pay now in Singapore to fund in, you could get money on the India side in like 2 to 3 seconds, 5 seconds at most, if there were no sanctions hits. So I'm saying people are getting used to that real-time, instant experience, and they don't want to pay for it. So how will banks and fintechs innovate to keep it cheap and secure and instant? And an answer on the fact saying that with these new fintechs coming up like Tunes and TerraPay, who are creating the web of their own accounts with their own arrangements, is Swift going to get disintermediated?
I think, see, customers, because there are multiple currencies involved, as you rightly said, right? Transparency is very important. What FX rate are you getting? It's not just the fees. What FX rate are you getting? What fees are you paying? How quickly are you going to be able to make the payment? Then again, sometimes this is complex. All of us, we live our life internationally. We 32 million of NRIs are around the world. Indians increasingly are living their lives around the world. Our corporate clients are investing overseas. Global companies are coming to India. Are you able to work with the client on compliance requirements? Quite often there are reporting requirements from a FEMA perspective. Are you making sure that you're working with the retail client, the affluent client, the startup? All of those people, front to back. Quite often, these clients actually work with each other. So you could, at HSBC, be serving the entire supply chain. Then how are you facilitating the payments? And I think transparency will continue to increase, but the need for compliance is never been higher. I think speed, we are almost getting to real time. As you see, our lives don't stop over the weekends or in the night. Why should our payments stop? And increasingly, banks and fintech providers are trying to create solutions which are instant and real time, and they're also working with each other to make that possible.
Thank you.
If I may, you asked a question about Swift. I want to be slightly provocative here, a lot of fintechs. With about 11,000 banks on the Swift network, I don't think the Swift network is going away anytime soon. But the reality is, there are lots of alternatives which are coming out. We have book transfers, as you talked about it. There is API-based solutions which we use a lot with our partners. There is blockchain-based solutions. We ourselves were part of the Partio network. We created Partio network together with JPM and Temasek and now Standard Chartered Bank. And that is, again, these are alternative rails, but it is still early stages. I think they will all coexist is my prognosis, at least for the next 5, 7, 10 years. And then we're talking about tokenization and CBDCs, but then there is a question of interoperability.
As plus of 80%. The business of the clients have gone up by almost 30 to 40%. That is the big impact of UPI. The other side of it is when they are coming to India and looking at solutions, which is compliance is one side, I think they are also looking at customized solutions. That is where fintechs can play a very big role. There are bespoke solutions required. There are split payments required in the compliance network, and that's where I think both things will remain. To that extent, I completely agree. I don't think Swift is going away, and I don't think so fintechs are even fighting that. They're fighting a very different ecosystem. If you look at, there are 20 websites, today there are 400. COVID, there were only 20, today is 400, and that is what is growing. So over to you, Prachi.
Thank you, Sudhir. So I agree with what Sudhir said. So there is a acceptance, availability of the product to players in the ecosystem and merchants and consumers who want to transact. And second comes price. So there is a significant large market both on the consumer side and on the merchant side of ecosystem who's not even having access to cross-border payments. Let me give you a simple example, in continuation to what Sudhir said. If you are an international merchant and you want to access Indian customers and you want to sell to an Indian customer, if you're going to offer only internationally activated Visa, MasterCard, you will probably reach to say 70, 80 million customers. Today, UPI is the way an Indian customer pays. And you have like 500 million customers who are transacting on UPI. So what is the international merchant wanting? Is he wanting to solve for UPI as payment option? Pricing will come secondary. So first is to make available the products and make more consumers to start transacting, more merchants to start transacting in the ecosystem. Similarly, when you look at Indian merchants who are trying to sell to international customers, there are so many markets like India where cards is not the primary way in which a customer pays. And making those alternate payments available is the first order priority, and then pricing comes second. So I think in cross-border payments, there is a lot of opportunity to first bring the products, and commoditization in terms of pricing will be secondary. And of course, in the large transactions where banks are already there and they've been doing this business for so many years, I think they have got into the discussion on pricing. I think fintechs have a lot to solve for first to create the products and then of course launch it at the right pricing so that more and more participation happens. I mean, I can't go out in the market, launch a product at a 7% rate, right? Then there will be only as much adoption. But if I am able to offer products which are 1%, 2%, you will see so many more merchants and so many more customers who want to start transacting in global. So I think all of us on the dais are trying to solve a different problem. But I think what fintechs are trying to solve is first creation of products which are not available and make more and more customers and businesses start participating.
Staying on with the merchant point and speed and cost thing that we spoke about, while the large banks here are committed to SWIFT, they are also members of the board and stuff like that. At the same time, keeping the interest of like merchants globally, Prachi's example of Indian merchants selling abroad, China to US corridor. Large banks like us also provide solutions which are economic and not necessarily through SWIFT, the whole aggregation, bulk and distribution model, right? So that also keeps the cost significantly down. No merchant can afford to get hundreds of wires in for each of their sale. So cognizant of that, so there are solutions that banks like us, I'm sure banks offer in different variants of it, both inbound, outbound corridors, which keep the cost relatively at a manageable level for the merchant from a margins point of view. Of course, may not be necessarily instantaneous because the machine in between is probably still old. We'll come to the new age solutions probably subsequently. But yes, so I would say yes, SWIFT is here to stay, but I think we're also finding ways to improvise and improve the merchant's life on the same channel.
Thank you. Thank you. So I think we are all agreeing on the fact that, we first said, is SWIFT getting irrelevant? Obviously, it's not getting irrelevant, but maybe there are these alternative rails which are growing at a faster click because of instantaneousness which they bring in because of no intermediary banks involved, and maybe sometimes it's cost optimization as well. But one thing is coming clear from both Prachi and Sudhir is that for cross-border merchant or retail payments, card is not your primary way to pay because obviously it's acceptance issue, like people don't have cards which are internationally available. The approval rate, decline rates are higher on cards compared to A, which is account to account. And we should be proud that India almost kind of invented the open banking because of the net banking which we had even for 20 years, right? 20 years ago, if I had to explain somebody that India has net banking, they said, what the hell is that? I said, it's pay by account. And now, like, pay by account or pay by bank is popular because of open banking and PSD2 and everything else in between. And banks like JP Morgan do support pay by bank for even fintechs. So I think you should, people in this room should come and realize the profoundness of this moment, that we have banks and fintechs which are sometimes servicing different customers, but a lot of their solutions are built in collaboration, right? Because a lot of things which Prachi and Sudhir at PayU do, like money movement, whether it's virtual accounts, whether it's FX, wholesale rates, they're buying that from banks, right? And banks are spawning fintechs, like HSBC is owning 100% at the moment of Zing, right? Which is a kind of a neo app for like Revolut or Wise to give to non-HSBC customers ways to have multi-currency wallet with 30 currencies and 200 countries to pay out. So I think this kind of coexistence and the symbiotic relationship between banks and fintechs will stay there. In many panels in the past, you would have heard this question, are fintechs and banks friends, enemies, frenemies, friends with benefits? I think it's all the above. It's, I think, depending on the scenario or the situation and the relationship, the tap dance happens. But I think they have to work together because banks have the regulatory license to clear transactions, to quote FX, they are AD1s and AD2s, right? Which fintechs are not, and they have to work with the banks. So I think we are coming to the end of it, so I'll just go one round with all of us, rapid fire kind of a thing, saying that is there anything in your organization or cross-border payment as a business segment holding you back from growing at 100% year on year instead of just growing at the GDP rate of 5-7%? Is it tech, internal challenges? Is it regulations? Is it like competitive forces? Or is it like just hubris? You're happy with where you are. You're already number one.
If I may say, we will all die at the KYC hill.
Sriram, why don't you start, please?
Sure, I'll start this. I think generally, as Prachi has also said, and Sudhir, I think the technology exists. I think a lot of great products are coming to the market. I think people are not trying to outdo each other to kill themselves in the process of being the last man standing, pricing down. I think that's a bit of that is happening. But the real big problem that I see today is fragmentation and regulations. So I want to take one step back from the point of view. We've been talking about making payments cross-border. We always think about payouts. But a big problem, especially with what Sudhir said, with India, for example, wanting to become an export-led economy, a lot of merchants selling cross-border. I think the ability to collect cross-border as a local is very important. It is underplayed today, and I think that is something that the market realizes, but there is no real solution which is wide enough. And a lot of that is to do with regulations. Every country has regulations on what you can pay out and what you can receive in. When you do that, what kinds of regulatory reporting and licenses you need, and they're too disparate today. For me, that is one single big hurdle. The second one, I would say, is basically also awareness. We are in the process of, we said that, look, we can try to launch a product, which we did, for cross-border collections. But then, in terms of aggregation of flows, we realized that actually we need to work with all the aggregators and support them. So to your point, we happily support a lot of fintechs and PSPs, and we help them collect like a local in the markets where their customers are exporting to. And then we aggregate and pay back, and I think it works very well. But I think we could do a lot more in that space and enable India and Asia to do much better on the export front.
I think the ambition levels will be determined by all of us in the room, right? But the client, it is the businesses which as they go more international, the individuals as they go more international. I think we feel very optimistic at moving at or with the customer. I think there are multiple other opportunities. You see Gift City, our India's international financial center, that will open so many doors for Indians to be able to hold multi-currencies around the world. And if you actually look at a Singapore business today and you had a global money account, you could actually interchangeably move money between 11 or 12 or 20 different currencies on a real-time basis. When you paid from your debit card, it will actually automatically debit the currency which you already have in your account. So there are multiple solutions available around the world. I think things like GIFT, things like as regulation changes. I don't think regulations come in the way. For 170 years, those regulations have changed. We comply with the jurisdictions of 60 plus countries. I think commitment to anti-money laundering has to be strong, right? I think the financial system has to be kept safe. That is a very important thought as payment professionals build cross-border payments around the world.
Yeah, to your question on considerations, I wouldn't say challenges so much, but while we talk about speed and economics as main, I think the security or safety is a key consideration. So we refer to KYC, but equally important is for this scale, how you can manage your AML considerations, your fraud checks, your sanctions, whatever your jurisdictional requirements are. I think they are increasingly important. Much as the governments and regulators want to grow this, at the same time, they are equally concerned on happening in the right way to the right parties. That responsibility is on, I would say, the bigger institutions a lot more, right? So it can't just be a market share game where you process volumes, but I think it has to be the right volumes for the right set of players. So to me, that investment to be at scale is an important consideration, for us to keep investing on. If you look at the challenges, which may not allow you to do 200, 300%, probably those will be one looking at a global scale.
Thankfully, for a fintech, it cannot be a 5% growth. Our base is quite small. So I think from a growth percentage perspective, it's not a challenge, but it's also the scale at which you have to operate. Completely align with, what my co-panelists have spoken. Even for a fintech, I think if you have to be a responsible fintech in a cross-border space, doubling down on the products for AML, sanction screening, fraud and risk management, these are paramount before you scale volumes. Right? So having the right set of policies to ensure that the right set of customers are getting onboarded and then the right set of transactions are flowing through your products, I think is a very primary responsibility. Cross-border, of course, is a very area of focus from a Reserve Bank of India perspective, and it continues to, feature in all the vision documents, including Vision 2025. And hence, we are seeing a lot of activity from a regulatory standpoint also. So recently, RBI came up with a PA cross-border regulation. I think whenever RBI creates a regulation, it only makes the businesses more legit and available for scale. even from a venture capital investment standpoint, because then it kind of helps to have a stamp to say that this business is good to do in a market like India. PA cross-border has actually helped players like us to increase the size of transactions that we are able to process, the currencies in which we are able to process the transaction. So I think it is onus is back on the organizations to ensure that you create the right products, AML, sanction screening, fraud management before you start scaling the transactions.
Yeah, so first of all, I think kudos to the government for at least getting the regulation around PACV. So from having different guidelines to much more structured guidelines and giving the impetus, because both the things, import and export, have now been given that lift. Now you can partner with the PA, you can partner with marketplaces, your ticket size has gone up, your regulations are much more clearer. It just helps us to scale faster. Just that I think the government is very clear that while you are scaling, please follow the rules of the land. And I think everybody, whether it is the PA domestic or cross-border, I think both have got the message loud and clear, and they are going that extra mile, investing in both systems, compliance, and the framework.
So I think we are in vehement agreement that they're all forces aligned that cross-border payments will grow. It might grow 200% for Prachi and other fintechs. It might grow in line with GDP, or the forecast for B2B is 10 to 11%, which is like maybe 3-4% ahead of GDP. But for India to become a 5 trillion economy, there'll be more imports of raw materials, more make in India, more Atmanirbhar Bharat. So I think this panel will talk about tremendous growth in next GFF and the years to come. And this is a secular force, the cross-border payments propel the economy further. So anyone in this room who wasn't aware of what is it all about and is excited, please meet the panelists, collaborate, start your own fintech. There's venture capital in this conference as well, so let the tribe grow. So we have few minutes. Anybody has any questions? Maybe we can take 2. Yeah. Whoever can get the mic first to them, please. Volunteers, can you get a mic to them? Or do you want to, you have a loud voice?
I'll try my best.
Oh, that's good.
So my name is Sar. I'm the founder of GetSimpliFin. We are building finance operating system for the other side of the table, which is the merchant or the businesses. Just a quick thought from your side. What is the preparation that is needed at the merchant side of it before it can utilize all of the infra that is being provided by either the banks or the players like PayGlocal?
Sure. Hi, thanks for the question. I think preparation in terms of they wanting to, sell to international customers.
Just the payments part.
Yeah, so I think 2-3 important consideration. One is who they are selling to. So are there customers, individual customers or businesses or both? Right, so that is one core identification. The second thing is where are they going to get these customers from, right? So is it going to be through a website, or are they selling on some marketplace? Are they going to do B2B orders by, probably participating in trade platforms and all of that? If they are on the website, of course, they would need a payment gateway kind of integration to collect, payments from their customers, whether it is cards or a non-card kind of a payment. If they are selling on, a B2B kind of a marketplaces, then of course they will have to tie up with, players in the ecosystem, including us, who provide marketplace kind of settlements for these merchants. And if you are doing pure play B2B and large ticket size, I think they are best served by the banks today in terms of the pricing and rates and all of that. So I think it will be a combination of things and combination of customer set that they are trying to focus on to provide the right payment solution.
Thank you, panel. Are you going to say something, or can we call it a wrap?
We can call it a wrap. I was wondering if we had one more question, but then I think
I can see a hand. If you can take a question, yeah.
one last question very quickly.
question is, do we see regulations becoming easier for outward remittances? Thank you.
I'll probably answer that. So there's a lot around 15 CACB and the cumbersome processes that people go through when it goes to outward remittances. I think the regulation is still not clear in terms of how we can simplify it. Unless Sudhir knows something, I think that flows are best managed by banks today. We would love to innovate, by the way, but yeah.
So maybe I can add to that. I agree that banks are the best port of call for that kind of activity. But I think there is I think we can have a deeper conversation about whether you're serving your own organization's payments requirements or you're doing it on behalf of. Then the nuances are a bit different. So we can have a discussion about that.
Yeah, to your point, the general preference would be one-on-one, right? Not the bulking, because there are various considerations. But those models exist based on specific approvals, in short. So it's not a straightforward answer, but the default answer is one-on-one because it's not just about RBI, but you have various monitoring, federal agencies, etc., looking at it. So the reporting definitely needs to be granular, but a payment, it could still be grossed up, depending on the use case of your customer or the merchant on the other side.
Well, that's about it from cross-border payments in business, in retail and B2B, of course. Thank you, everybody. Thank you, Mr. Gaurav and all our panelists. Let's have a huge round of applause for such an interesting insight. We'd like to have a group